Just talk to us about what you think the investor base heard and liked. Is it the fact that you're adding these customers? Is it that you're able to perhaps share some of the costs going forward?
Well, thanks for having me in. And I think what we're seeing maybe today is kind of a continued story and accumulation of the last several quarters. Obviously, to your opening, we've been focusing the business to be much more adept in the communication space. And we started that work in earnest about 2.5 years ago, 2 years ago, and completed the Warner Media transaction early part of last year. And I think investors were stepping back and asking, is this the right place to go? And are they going to be able to execute around it? And I think what you've seen over the last couple of quarters, in particular in the third and fourth quarter, where we continue to grow the business, we continue to pick up the customer base, and now we're seeing the profitability and cash accretion back into the business as we've made those investments and managed to run the business better. I think they're starting to gain confidence in that, and rightly so. And we intend to kind of stay focused on that and keep moving forward with that strategy.
Investors confident. What about consumers at the moment, John? You've got a great bird's eye perspective on how much consumers want to be spending. Can you pass on costs? What does the macro look like?
Well, we have a broad scale of consumers at every end of the socioeconomic stream, and I think there's probably a couple different stories in this. Clearly, the low end of the consumer base is stressed a bit more. We tend to see that exhibited in them taking a little bit more time to pay their bill, or to call in and ask for arrangements to pay their bill, or possibly recharge a little less frequently if they're a prepaid subscriber. But it's not that they aren't buying the service, and it's not that they aren't paying. They're trying to manage it within an overall stressed environment where I think they're making other choices on more discretionary items that they're moving out and just trying to balance their overall obligations.
Yes.
The top end of the market, it's still really strong. We're coming off a good volume year. I think it'll temper a little bit as we move into this year, but it's still going to be pretty healthy, and it's just indicative of how ingrained in life I think the products and services we sell are.
Hey, John, I want to jump on that. The sell side reaction, or their conclusion, seems to be you're prioritizing financial growth over subscriber growth. Yet in the fourth quarter, you added 656,000 new phone subscribers, strong growth in the fiber optic business. Are they right? Is it a case of financial growth over subscriber growth, or can you achieve both?
Oh, it's both, and I actually probably would not agree with that conclusion. And we were share accretive this year in the industry in both wireless and in our fixed broadband business. And so, we are growing not only share, but we're growing profitability, and it's coming from getting the right customers the right way. And we think we've done a really good job of tuning our offers into the right segments where we've been underpenetrated to be able to gain that share. And we've been working really hard on restructuring our business and our cost structure. And we can do both at the same time. And I think as a result of that, we can drive profitability growth at the same time that we're able to grow the business at the top line.
Hey, John, we're a technology show. We pride ourselves in talking about technology, but I got to put the hard questions to you as well. So ask it like this. How much visibility have you really got through the end of the year? Is it that 5G continues to drive this growth, people buying new handsets? Is the consumer strong? Or actually, are you being a bit conservative here because you don't know what's going to happen?
Well, visibility in general, I would say over the last 2 years has probably been a bit more challenged given the environment we're in, but I'd take it at two levels. There's the visibility on the geopolitical side, which I'm not going to sit here and tell you that I'm better than people who do that every day for a living. I mean, I don't know when somebody who leads a large country somewhere around the globe is going to do something really silly or stupid that could have a big impact, not only on AT&T, but literally every for-profit enterprise around the globe. That I have no visibility to, or any better visibility than anybody else. But the visibility on how the economy is performing, I think we have reasonable visibility. I think we've been pretty conservative in our assumptions moving into 2023. I would point back to our performance in 2022 as a point. Inflation clearly peaked last year. We were hit by that. We were able to navigate through that through a lot of good management techniques, combination of managing our cost structure, as well as ensure we were driving the right value into our consumer base. I don't think we're going to see an environment that's probably more dynamic than what we saw last year. We'll have new challenges to work through. But this is a management team that's shown itself to be pretty adaptable and pretty agile in being able to adjust to those things. And I feel our assumptions on our guidance are consistent with what we can do there.
It feels like you're getting creative too, John. Of course, you're focused on the good things the investors want to see. Dividends, debt payment, of course, after what had been a lot of building up of debt over M&A and now the unwinding of that. I'm interested in how you're doing joint ventures. I was interested, for example, in the BlackRock Gigapower deal and the way that you're going to be offering fiber. Is this about ensuring that you're spreading the risk as you still continue to invest in the fiber plan?
It's a combination of things. Certainly, it's a dynamic of taking a new investment thesis that, frankly, is probably not well proven in the market today and sharing some of that risk as we prove it in. And I'm trying to be responsive to share owners and ensure that as we consume capital and invest it, that they can gain confidence that we can do that wisely. And I think we've done a really good job of that in our traditional lines of business over the last couple of years. Since this is a new approach, what I've told the street and what I want to do here is make sure that as we put the first tranche of investment in, that we can come back and show them that we can do this right and earn a very competitive return with it. And to the extent that we do that, and when we do that, we'll of course put our foot on the accelerator and go a little bit faster and do a little bit more. And this allows us to do it with a partner. It allows us to offload some of the risk during that prove-in period, so that I think it keeps everybody comfortable on the continued income production capabilities of the existing business while trying to find a new vector for growth.
New vector for growth, everyone said 5G is it. The way we're all going to have connected devices, the way industry is going to connect. Is it here, in the here and now, John?
But it's not here in its full maturity. And I think what I would first say is we shouldn't underestimate what I will call the meat and potatoes aspect of investing in the new 5G spectrum and the new 5G equipment, which allowed for more capacity on wireless networks. And what wireless operators have done with that capacity is have individuals move into new devices and buy up on more robust plans with higher value, and that's driven ARPUs up. And without that capacity and without that increased performance, that wouldn't have taken place. But that's not the be-all, end-all to 5G. The be-all, end-all to 5G is the capabilities that it brings in to enable what you were talking about before I came on the show, which is things like autonomous vehicles, so that if Tesla decides to bring a vehicle to market and they need to have persistent, high-quality connectivity everywhere that vehicle goes, that's when 5G is really going to shine. And the networks are just getting now to the point where they're more ubiquitous and scaled enough to do those types of things. And I do believe that will open up new revenue streams.